you're going to cover and why it's of relevance to this audience. So over to you, Omar, first of all. Omar.
Yeah, nice to see everyone. So I'm Omar Rahim. I run Matcha Capital. It's a digital asset fund. And I've been in crypto for about 6-7 years, formerly led the MENA team at Binance. So hopefully today we'll give you a little bit of an insight into how family offices should be preparing to invest in the digital asset space.
Hi, nice to meet you all. Thanks for inviting me to the conference. My name is Sumeet. I work in the investments team at Cypher Capital. Cypher is a full-fledged VC. We do multi-strategy investments across mining, OTC, and venture capital as well. And a parent company is a family office, which is called Phoenix. They've been doing mining since early 2015. And now the idea is just to understand, how family office can structure crypto, and we'll try to shed as much light as we can in this conversation.
Yeah, absolutely. So I just want to kick off. Digital assets have been around for a long time, but increasingly we're still finding that family offices are yet to dip their toe in the water in the digital asset space. And a lot of the reason for that is, it's very easy for a single investor to go and buy Bitcoin, Ethereum. What's probably more difficult is the market tends to focus on coins that are going up 100% over 3 months. And understanding family offices, I think the most important thing is that it's not about returns over 6 months, 9 months, even 2 years. It's about wealth preservation as opposed to short-term returns. So the biggest thing that we find when dealing with family offices, both in Europe and here in the Middle East, is there's much more of a long-term view, and they don't have the same level of FOMO that the average investor has. So if I take a walk around the hall today and speak to most people, certainly at my time at Binance, were asking me, which coin should I buy? Meaning, which coin should I buy, that's going to appreciate in price over the next 2 weeks, 3 months. The conversations with family office is very different, and maybe, Sumeet, you could give us an idea into the typical questions that funds like ours get from family office investors.
No, generally the broader thing is they have low risk appetite, because as Omar mentioned, they like to preserve the cash rather than make the wealth. So they are still trying to dip their toes into the water, trying to understand how do I get into the next 100x or 20x. But in the end, the goal is how do I preserve my capital. So broadly, what they look for, okay, what should be my strategy to enter crypto? Like if I want 5% exposure to crypto, what all should I take? What all should I avoid? And generally, it's a lot of them usually start with BTC or ETH, and then go into mining as well, because that's a very capital intensive business where you can deploy a lot of capital as well as get better rates of returns compared to any other investment class. So that has been what we have seen at Cypher. A lot of family offices wanted to enter into mining. They go into mining pool, they buy some machines, they want to host it, and they get BTC out of it. So that has been the major criteria. But now what we are seeing is a lot of them want to experiment with new, maybe top creamy blue chip tokens like Near Protocol, Surana, BSC, and they want to understand how they function. But the broad question all of them have is, how do I value that? So Omar, if you have some thoughts on that.
Yeah, no, I think that's very fair. I think that word that you use, that conservatism that family offices have, is the biggest difference to have. So in our fund, we have investors from family offices. We also have, let's say, high net worths who've typically made their money in technology or crypto, who are much more aggressive with their strategy. So, for example, for a client that has made money in crypto, has made money even in Web 2, very rarely do they need advice on making long-term positional plays. They're more interested in allocating to digital assets that, spotting the next big trend. So if you look at the trends we've had over the last sort of 5 years, we've had centralized exchanges, we had DeFis, we had NFTs, fan tokens. So let's say more tech-savvy investors are probably trying to find out and coming to funds like ours to try and understand what the next big movement is in those investments. Whereas, as Sumeet correctly said, the family offices will take a back seat. And for us as funds, I would say those deals typically take a lot longer to close. So if we're speaking to an investor, and we just like entrepreneurs, we pitch to investors, a tech or a Web2 investor might close in 2 months, 3 months, 6 months. It's not untypical for a family office to be speaking to you for more than a year, even 2 years, building that relationship before they invest. And all of you have probably got exposure to coins where you've lost some money, you've made some money, and you'll all have friends that say, please tell me about the next one. That also happens to us in funds. And sometimes people will, because of who you are, because of the track record you've achieved before, will invest. Family offices won't care. Even if you presented a coin and saying, we got this for our client base, and we were lucky on this coin, we got 100x on this coin, that won't cause them to all of a sudden write a check and say, right, okay, well, here's $1 million, we want that next 100x coins. I would probably argue with family offices, it's almost the opposite approach. So if we go into speaking to family offices and say, hey, we're going to find you the next 100x coin, that was probably a red flag for them. What we're constantly communicating, and if anyone else is either a family office or thinking of running a family office or getting involved in that industry, is that you have a deep understanding of the underlying technology and underlying trends. And the fact that you communicate to your investors that, we're trying to create value for over the long term. Family offices typically should be, most of them, thinking decades. So that means that they're interested in not taking out money in the next bull market, but how do they allocate a small amount of capital as a percentage of their whole portfolio that is going to grow and grow. And there is a difference between geographies as well. And Sumeet, one question I had was sort of on your experience. Have you seen much of a difference? Many of us in the industry have just come back from Singapore, for example. Have you seen a difference between the attitudes and the conservatism or not of family offices here in the Middle East compared to regions who've been investing for maybe some time in the Far East, in Europe, for example? Have you seen any differences in approaches?
I think broadly, the family offices over here, they all talk about ROI. Okay, how much return would I make, and will this beat BTC or will this beat S&P 500? So they still have the S&P 500 index in mind. That okay, how do I beat that index? And just on the regional level, as you kind of pointed out, Eastern offices, especially in Singapore, they are much more advanced compared to the Middle East. They've already got invested in fund of funds, or some level in mining, or in some level in crypto in general. But Middle East funds are kind of catching up, but the advantage is they have huge capital. So once they get in, they know how do I make sustainable ROI. They know what to do, what not to do. I think that's the major thing that we are seeing right now. And I think one more thing, the question that we can discuss about the security perspective. A lot of family office feel that will my investment be secure because there's no regulation right now. And that is why all of us, and especially Vara and everyone, are working towards that. So what's your take on when you talk to family office about regulation? How do they feel about it?
Yeah, I mean, I think it was only a matter of time before the R word was mentioned here. And it's probably a big theme here, regulation, and it has been for a few years. It's probably the biggest barrier to stop family offices from investing in this space is the lack of regulation. Typically family offices are used to dealing with traditional asset managers who will be bound by financial regulations in their jurisdiction. So trying to explain to a family office why a cartoon animal has gone up 10,000% is a very different conversation from explaining what's happening in the bond markets, for example. So it is a very slow process, and I would advise anyone that's looking to get rich quick not to look at getting family office investors, because it's not that market. It's really about relationship building and understanding trends for the next 5, 10, 15 years and beyond. Talking of that, I think one area that might be interesting is, we talked a little bit about the trends. We talked about DeFi. We talked about NFTs. For you as a fund, when family offices or other investors are asking you what are the next big trends that you see over the next 2 years, I think it might be interesting for everyone to hear from Cypher's perspective. What do you think are the sort of up-and-coming, most interesting areas that you're looking at over the next 18 to 24 months?
I think for us as a fund, we are mostly focused on infrastructure layer. because this is where the next 18 or 24, the app layer will come in later once the infra is set up. And we are at a very early stage right now in Web3 where we are just setting up the infra. We are setting up layer zeros, layer one, middlewares. So everyone wants to see and invest in airports basically rather than investing in a plane. So that's the approach we are also taking in Cypher Capital to understand like within each like GameFi infra, NFT infra, we deployed some capital into NFT security company, then couple in the GameFi infrastructure company just to understand the market better. And we know like bull market, bear market, this infra play would still exist because all the apps will be built on them. So that is one big area for us. Apart from that, generally layer zeros or layer ones, because right now the gap is there are a lot of L1s, but they don't talk to each other in a very seamless way. So we need to figure out, are there bridges, or is it going to be a layer zero underneath layer ones, which is going to win? So that's one area we are actively looking into. And apart from that, broadly in the sense of, Web 2 to Web 3 space, like a lot of gaming studios, especially established gaming studios, they are moving to Web 3 now. Like we met a couple of studios from Korea. They are established in Web 2, they have like millions plus users, and now they want to exploit and understand Web 3 better because they have better economics. So they are trying to understand the economics of the Web 3 in general so that they can move their games to Web 3. So I think that these three would be the top themes from our side. What about you?
Yeah, I think that's very, very interesting. So our focus as Matcha Capital, as you know, is very much early stage, so pre-seed, so which is the riskier asset classes for our VC arm. Our hedge fund deals in more traditional investments, so the blue chips, Bitcoin, Ethereum, etc. So I'll talk a little bit about, I hope everyone understands to some degree the plays that are going on in Bitcoin and Ethereum right now. So I'll leave that maybe for another talk. But on the pre-seed side, we're very interested in two things principally. Number one, social media. So we still don't think there's been a real big breakthrough in Web3 social media. There's been a few experiments, which is normal in a nascent space. So we're still waiting to really back those businesses that can really make social media, pull in users via social media. Because personally, I don't think most retail users don't care about the technology. They don't care if it's blockchain, they don't care if it's an NFT, they just care about user experience. So for us, we're always looking for Web3 social media platforms. And the second big area we're looking at is, we feel that DeFi will have a second wave. So the first wave of DeFi was very experimental, and it's sort of still going on now. What we think is solving real world problems with DeFi will become a huge play over the next 18 to 24 months. So solving real problems that the traditional financial markets, products that have existed for decades, those projects replaced by DeFi protocols is still, I think, massively undervalued. So anything that is really looking at that space is very attractive to us right now.
So Omar and Sumeet, we could continue this discussion a long time because it's fascinating. But I would like to say thank you very much for sharing your insights from a family office perspective in the region, your experience of the past 6-7 years. So I'd like a big hand for Omar and Sumeet. Thank you very much for sharing that. I'll keep one microphone. So, I'd like to introduce our next presenter. Slavomir Pasco from Neti is going to talk about how to bootstrap your project effectively, how to bootstrap your blockchain project. So Slavomir, over to you, sir.
Hello. As it was already said, my